Okay, welcome everyone to today's webinar, From Diesel Dependency to Electric Reality, Why You're Already Late. And we're super excited to have you all joining. So before we dive in, a quick introduction to who will be guiding you through today's session. You will hear from two perspectives today. First, from my side, representing JUNA as your full-service electrification partner. And second, we have our guest speaker, Anders Lampinen from TRATON Group today, which will bring the OEM perspective. So my name is Cecilia. I'm the head of sales at JUNA, leading our commercial efforts. And my focus is working closely with freight buyers to support their transition to electric, but most importantly, to make that economically viable today. And I'm super happy to be joined by Anders Lampinen, the head of e-mobility at TRATON Group today. And I'll be handing over to Anders in a second, so he can also briefly introduce himself and kick us off. But before that, let me quickly walk you through today's agenda. So we'll be starting with the big picture, so from vision to reality, hearing from the OEM perspective. Then we'll break down the EV value chain today into its core components. Next, we'll focus on how to win EV, so what really drives diesel parity and makes projects viable today. And we'll then bring this to life with real operational examples from the road. And finally, we'll close this with a practical EV readiness checklist you can take away, and also after going to share a more extensive version of this checklist with you. So now, without further ado, I'm handing it over to Anders to kick us off with the OEM perspective.
Thank you very much, Cecilia, and thank you for having me here. So my name is Anders Lampinen. I'm heading the e-mobility product management at TRATON Group. I am an old dog in this case, sort of 20 years in Scania and now 3 years in the TRATON Group, where I today overseeing all e-mobility program for TRATON Group brands globally, so to say. Of course, I also started the early mobility sales at Scania in 2019 as an early entrepreneur and try to get BEV sales out in the market. So nice to be here and also see the learnings, what you have now gained from the JUNA perspective hands-on. Today, I'm here to share a little bit to the OEM perspective. Where are we and how is the marketing developing in Europe and globally? And since I'm also very involved in the China perspective, and I will reflect shortly about that one. If you look to the left now, we see sort of how the total sales of Europe, how that has developed the recent years. And as from 2019 today, we start to get somewhere on an industrialization scale, which it makes sense now to really push e-mobility further. The early years were all about setting up the pilots, making the trials, understand how we should do depot charging, how should we electrify logistics, etc. Now we are in the scaling mode where we have done our sort of learnings with the customer base, transport buyers, etc. And now we are on the scaling perspective. Still, of course, the green transition in Europe has got some little bit of bump, I would say, from the energy crisis we have had in Europe and also the war with Ukraine that has taken somewhat of the focus away from the EU Commission. Now we see once again they are refocusing on that one and also try to support what we call the enabling condition that we need in order to be able to electrify the logistics in Europe and globally. If we go to the right, we see also that there's a different maturity of different countries when it comes to electrification, where you see China, they have gone to an early majority where sort of 2024 we had already 100,000 BEVs in operation. And that, of course, is something which we need to also take care of also in Europe because they learn a lot also from logistics, how to set up logistics with e-mobility, so to say. And if you go to European-centric perspective, we see that Switzerland, Norway, and the Nordic countries, including Netherlands, is still in the forefront. They were already then, 2019, in the early phase, and they remain. What's a little bit worrisome, and I think here's the JUNA initiative very important, is on the German market that we get more traction because we know that Germany as a logistical hub for north-south transport and east-west is the key also from all logistics that it works from an e-mobility perspective. That means if Germany not accelerating, that also in some way stalling the real long-haul operation that we also have in Europe. Can continue to the next perspectives. If we then look on the tech side, of course, we spend an awful lot of money now in investing into the e-mobility journey because, as you know, the OEMs, when it comes to the CO2 legislation, we are obliged to have a certain quotas of BEV sales when it comes to the current CO2 legislation in Europe. That means that we have put in multi-billion investments into battery factories, building these industrial capabilities in order to drive the decarbonization to make sure that we comply with the net zero target that TRATON have, but also for the greater good and the Paris Agreement when it comes to the world decarbonization perspective. If we then look on the different generation, how the different tech has been developed, I mean, in the earliest of the 2020s, is about to get these distribution trucks out. With installed energy we've had back then, they were suitable for the urban distribution and some regional transport. Then we have had a very steady pace of different generation upgrades where we have added more installed battery capacity. We have installed better charging power, so to say, in order to make quicker charging events and also by that during certain lunch breaks be able to drive longer, so to say. And the phase we're in now is to get to the so-called long-haul capabilities, where there are two different main drivers to get to a long-haul operation. And when we talk about long-haul operation, we're talking about annual kilometers are above 120,000 annual distance. And there we, of course, this new mega charging standard called MCS is a key enabler for that, because that gives us the prerequisite to charge the vehicle during the break and then be able to continue the operation for yet another 4.5 hours perspective. Easier said than done, depending on what logistical system we are operating in. But of course, in theory, that is what we now try to implement, so we get the true long-haul capabilities there. And then, of course, adding all the charging services. Bidirectional charging is important when we try to also do grid balancing in the depots. Adding payment methods like we have now installed with the TRATON charging solution perspectives, and make sure that we have a smooth sort of plug and charge payment experience as well. So we are also maturing on that perspective to take away all the hurdles you may have experienced on the pass car side with multi-cars you need to go and, the hassle. That cannot be the case in a commercial transport. Within short, we will also add up to 700 kilowatt installed hours into the trucks, meaning that we will be able also to cover the most extremes in most of the cases of the logistical areas. So that is also a very key enabler. So we can now from 26 and onwards towards 2030 accelerating the BEV sales. If you look into the future and future is near term for us as well, it is all about now to even make the modular system more competitive from a cost perspective, but also be able to go to the more extremes, like in the Nordics with 60 ton plus operation, where we have a lot of customer demands, and also from, I would say, the industrial sector, from the mining sector, etc., where we also try to add performance steps that we can also go into the industrial segment of forestry, mining, etc. And of course, going to even higher charging speed, get to what the true megawatt charging by then increasing the capabilities of the truck, so to say. And of course, all the properties, of course, when it comes to cost and payload, that is, of course, the key for all OEMs now to get to as close to the ICE payload for an ICE truck. So we are not sort of in some way losing the income side. We are also doing a lot of lobbying towards the Commission when it comes to weight and dimension to get even more support there to make sure that a BEV truck is sort of neutral to an ICE when it comes to the income side. So we're not losing income by going to BEVs. Main focus on the tech side. If we then go to the next part, which is sort of maybe the most important discussion with you online here today, and where I earlier spent a lot of time, is that we're quoting the transporter's dilemma connected to electrification. And the discussion here is, of course, that there is a wish to decarbonize logistics. And everyone in this room knows the margin for a transporter today. It's a low margin business. But taking on this big investment like a BEV fleet is, including the charging infrastructure and building up an organization to learn and do that, that requires some sort of long-term perspectives. That means that we, from the OEM perspective, spend a lot of times with the transport buyer to educate what electrification means and what prerequisite a transporter need to have, either contractual length or whatever that may be, to create comfort to dare to invest into this sort of new technology, and with a longer time of rights off as well, to make sure that we get into these partners. And of course, bringing in infrastructure partners, depending on how big this transition is, to make sure that we need to work together here. And the together thing is a very important learning that we also already made early in this e-mobility transformation. And of course, JUNA is one attempt to also take away that sort of uncertainty by offering truck as a service concept, etc., to simplify decarbonized logistics. I think this is a fantastic initiative, and that will also support the journey in Europe and others. But here we spend a lot of time, and this is also dialogues that we need to have. We also know that when we are going into electrification, we are not selling a truck. We are actually selling a migration journey where you take depot by depot by depot, because no one can go big in here, because it is a big change. And that is also the learning we had with early pioneers in Norway, who maybe went too fast into electrification and needed to brake because the organization could not cope with all these new things. Connecting electrical vehicle to a dispatch system, to a planning system, etc. It also requires a lot of organizational skills, and not all transport companies are on that size that can handle those big changes. That's why also we see that the transition starts with the big accounts, the 4PLs, the 3PLs, and also big retail firms that has huge sort of own accounts, who have the muscle to sort of do these early pioneer stages. And our job at Truck OEM is now to bring the mid-size fleet and the smaller fleets there to invest by applying our learnings we have done with the bigger fleets. So this is now the OEM perspective, and I think that goes not only for TRATON Group. This is what Volvo Group and Daimler Group and Packard Group is doing at the same stage, so to say. So, but the important message is that the electrification will not happen without the transporters' buyers' commitment. That's where it starts. With that mindset or that vision, that sets the prerequisite for electrification to happen. And this is my important message to you here online, that if we would like decarbonization to happen, then the transporter we need to start a discussion, because that sets the prerequisite for the transporter and into the logistical system that we might need to adapt somewhat when you go to electrification. Sometimes we can just copy paste diesel logistical system, but in some cases to enjoy the TOE benefit, the total operating economy benefit, we might need to change some pattern in some of the existing logistical systems. So that is sort of my end message to you guys here. We need to have a tight dialogue, and I think the JUNA here today team will also share some very important learnings, what they have done when it comes to the transport economy for BEV trucks. Cecilia, I'm handing over to you now. Thank you very much.
Great. Thank you, Anders. So after hearing the OEM perspective, now let's look at the big picture, because one of the biggest misconceptions, as Anders already mentioned just now, around electrification is that people think it's just just about replacing a diesel truck with an electric one, but it's really not. It's about managing an entire value chain behind it. And this is exactly what you can see on this slide. So across every layer, you can see the same pattern. There's always a perceived blocker on the left side, and then right next to it, there's already a solution that is ready or emerging today. So let's start with the truck on the right upper side. Yes, there's higher upfront costs and uncertainty around the residual value, and those are absolutely real concerns. But pricing is already moving, and more importantly, flexible financing models are evolving to take that risk off the balance sheet. Then on the energy side, there's always volatility and charging costs that often come up first. But again, electricity introduces something fundamentally new, which is control. So you can produce it, procure it, and stabilize it. And with that, that means that transport costs become more and more predictable over time. For infrastructure, the narrative is also very dominated by constraints. So we hear a lot about grid access and depot investments. Those, again, are absolutely real. But at the same time, public charging networks are scaling and shared infrastructure models are reducing the need to solve everything by yourself. Now, on the left side, looking at the operator, there's many carriers that are still set up for diesel, but this is also changing quite quickly. And EV capability is becoming a differentiator and increasingly something that shippers expect and not just prefer. Then we see tolling. Here, regulations vary, but the direction is very clear. So we see incentives like toll exemptions that are already making a meaningful difference in key markets, such as Germany, for example. And then finally, on the top left, emission targets. These are super complex, yes, but they're also one of the strongest drivers behind all of this. And EV is now one of the most scalable and cost-efficient ways to reduce CO2e. So, what is the main takeaway of this? If you look at each of these pillars in isolation, then EV feels really hard. But if you connect all of them, something really important happens. We see that we're not waiting for the future anymore, but the solutions are already here today. So, the real question is not if EV works, but it's more, can you orchestrate this value chain better than others do? So building on the value chain that we just looked at, once you understand all of the moving parts, the next obvious question is, how does the TCO look like? Because at the end of the day, everything comes down to economics. And what this slide shows is the status quo of EV versus diesel cost structure today in 2026, and then how it evolves towards 2030 and 2035. And importantly, it breaks it down to the full cost per kilometer into its core components. So I'd like to highlight a few things to focus on. First of all, the black part, the carrier cost. Now, this is very important. Carrier costs are identical between diesel and electric. So the difference in total cost shouldn't come from the operators. It comes from everything around the vehicle, then everything around the energy system, and also, very importantly, how you effectively plan for high vehicle utilization. Then the biggest topic is always capital cost, which is represented as the dark green in the picture. And yes, again, EV trucks are still more expensive today. That's something we can clearly see in 2026. But two things happen over time. EV costs come down significantly, and diesel costs increase, which is driven by regulation and also declining residual values. So this gap actually closes faster than many would expect. Then second, energy costs. So already today, we see electricity is cheaper than diesel on a per kilometer basis. And this advantage is something that grows over time. So while CapEx is often the headline concern, if we look at OpEx, this is already working in favor of EV. Then the third part, repair and maintenance. EVs are structurally simpler, so there's less moving parts, which then again translates directly into lower maintenance and costs over time. Then the charging infrastructure. Yes, this is an additional cost component of EVs, but cost component for EVs. But this is not static. So you can already see increasingly reliability on public infrastructure and also shared models and avoid full upfront investments, especially if we're looking at scale. And then one of the biggest levers in Europe are road tolls. In Germany, we see that EVs are fully exempt until 2031, and that is a massive structural advantage compared to diesel. And then from 2031, it's assumed that EV will pay road tolls except the CO2 component, and then this would translate into 80 cents per kilometer, so around half. And if we look at all of this together, we again see the direction of travel. Even if EV parity is not something that is fully possible in every case today, we see that the system is obviously clearly moving towards cost convergence, and then also beyond that. And this actually brings us to the three key levers on the right side. So first of all, truck purchase and financing. So this is still the biggest barrier, but it can also be the biggest unlock through flexible as a service models such as JUNA. Then the second pillar is utilization. So the more you use the vehicle, the faster the EV economics work. And third, energy and charging strategy. So with scale, you unlock significantly better electricity costs. So the takeaway of this slide is simple. EV is not fundamentally more expensive. It is just structured in a very different way. And once you optimize these key levers, then cost parity is something that is already possible today, as you can see in this graph. Now, if we take the cost structure that we just looked at, the next logical question is, how do we actually win with EV economically? Because the truth is that cost parity does not happen automatically. It's something that you need to design for. So now let's look how this design can look like. There's three main drivers that determine whether EV works or not. And the most important part of this is that these are operational levers. So it's something that you can directly influence. The first and the most important, we've heard it a lot, is truck utilization. So this is the foundation for everything, and it comes down to three things. First, network structure. That means what kind of lanes are you running? Closed loop or intercompany flows, for example, are much easier to electrify than complex customer delivery networks. Then volume density, you need consistent volume. So at least one load per day to keep the truck productive. And then there's operational stability, which means low volatility. In your network, if your network is a highly seasonal or unpredictable network, then utilization drops, and that again then has a negative impact on our EV economics. The second driver is leveraging toll savings. This becomes especially powerful once you move into higher mileage cases. So typically around the 400-kilometer mark per day range, we see a certain sweet spot dropping and kicking in. And why is that? That's because we can maximize our driving hours. We can spend more time on road tolls. And then this is exactly where the structural advantage over diesel comes in. Then the third driver is the energy cost optimization. So electricity price is not fixed. The more volume you bring, the better the contracts you can negotiate, and the more efficiently you can utilize your charging infrastructure. And this again then improves your cost base. So how do you actually apply this in practice? This is where the three steps on the right come in. So first of all, you need to understand your network. So you need to do a full network analysis and understand your lanes, your volumes, your patterns, and from there identify what is realistically electrifiable today. Second, you identify based on your network analysis, your electrification potential. So not everything will work on day one, but some parts of your network will, and then these are very good starting points to build on. And then third, you build to scale. So first of all, you identify your low-hanging fruit, and then from there you create repeatable setups and then expand step by step across regions and use cases. So this again reinforces that EV success is not about technology, it's about network design, utilization, and scale. And the companies that get this right early are the ones that will win economically in the future. Now let's build directly on the previous slide and understand how to actually identify the right lanes to maximize truck utilization. At a very high level, there are four lane archetypes that consistently work well with electrification, and each of them are essentially different ways to keep the truck busy and as possible, busy and as busy as possible throughout the day. So let's start with the first one, short shuttles. And these are typically very short distances, below 50 kilometers one way, and you then run them back and forth multiple times per day. This means high number of daily loads, very predictable operations, and often there's no need for complex charging setups. And in many cases, one charge is enough. Then the second, round trips. Here, the goal shifts slightly. This is not about number of loads. This is about maximizing the loaded kilometers. So this is where we start looking at longer distances, but the structure them in a way that the truck always completes one full loop and then returns to its origin, which is very critical for operational planning. But also very important to mention is that this is also where toll advantages and CO2 impact really scale. Then the third one are hub and spoke networks. This is a very common structure. A lot of you will know this. You have a central hub and then multiple destinations around it. The truck runs multiple deliveries per day, always returning to the hub. And then this again means we focus on multiple loads per day, high utilization, and operational consistency. And then finally, what we would call corridors. This is a bit more of a complex setup, so a bit more advanced. And here, instead of looking at single lanes, we start combining multiple lanes into one optimized flow. And the goal here is to push utilization above 80%, reduce empty runs, and simplify the network by bundling flows together. And this is often where you unlock the real step change in economics. And you can still see one clear principle: EV works where you design for utilization. Now, all of this has been quite theoretical, so let's take a look at the actual numbers. We go into detail. Before we go into detail, we are looking at 450 to 500 kilometer daily mileage cases. The reason for this is, as mentioned before, that here we see the sweet spot for EV economics kick in as they start to structurally outperform diesel. Now, what you see in this slide is a like-for-like comparison of EV versus diesel across three scenarios. At the top, you can always see the input assumptions that we base the calculations on. So the diesel consumption and the price based on the current market levels. We looked at Berlin, for example, and this is then the current market level of diesel. The electricity price that we can assume. And then below that, you see the full cost breakdown. So for example, the truck cost, then the carrier costs are set to TBD as they depend on your individual carrier contracts. And now, again, this is important. We've mentioned this before. This component should be identical for diesel and EV, which is why it's not significant for our cost comparison at this point. Then we see tolls and energy costs that have an important impact as well. And then at the end of each calculation, we see the total cost per day and per load. We're just looking at one load per day, so this is the same in this example. And then through that, we have a direct comparison between diesel and EV costs. So now let's look at this step by step, starting on the left with the 450 kilometer example. Even in this relatively conservative setup, you can already see that EV is about 13% cheaper than diesel. If we then move into the middle part, the 500 kilometer example, this is where things get a little bit more optimized. So here we have higher mileage, and that means, again, better utilization of the truck, more exposure to toll savings, which then translates into a slightly higher saving of 14% cost advantage over diesel. And now the right side, this is where it gets really interesting. Same 500 kilometers, but lower electricity price. So here we're assuming a 25 cent per kilowatt hour price, which is totally realistic for depot charging at scale. And this is then where the economics really unlock. And you can see that we're at close to 30% cost advantage versus diesel. So to summarize, what does this tell us? The outcome is driven by a few key levers. So first of all, daily mileage, which translates into utilization here, truck cost, toll savings, and electricity price. And this is exactly why planning matters so much, because if you get these levers right, then EV is not just a sustainability play, it's actually a pure economic advantage. So before we go into the operational learnings, let's first ground this in real data. So we'd like to explain a little bit how we're basing or where we're basing all of these findings on. So not just theoretical concepts, but something that we can actually see on the road today. So what you can see here is essentially our JUNA operational database. So we started in 2023 with our first electric truck. And then since then, we have scaled to 70 plus trucks running daily with the longest running lane of 240,000 kilometers per year. And we're doing this across 4 countries. Importantly, this is not one specific setup. This fleet includes multiple OEMs, so MANs, Scania, Volvo, Mercedes, and Renault. So we're not looking at one single pilot here. This is really broad, real world data across different vehicle types and operations. And if you look at the graph on the left, you can see how quickly this scaled. So from the first truck in 23 to over 2 million cumulative kilometers driven by April 2026. So we're not looking at testing anymore. These are real operations at scale. Now, if you look on the right side, there's a few key data points we'd like to highlight. First, battery health. Across the entire fleet, we are still seeing over 98% state of health, which is important because one of the biggest concerns in the market is battery degradation. And what we see in reality is the opposite. So degradation is slower than industry expectations, and we will go deeper into that in the next slide. And second, CO2 impact. Only in April 2026, this fleet has avoided over 160 tons of CO2e, which is a massive number if you let that sink in a little bit. So now that we've seen that the scale of our JUNA operations, we'd like to go one level deeper and understand what that actually means and what that data tells us about running EVs every day on an operational basis. And what you can see here is a summary of real operational insights based on our fleet data. So again, this is not modeled data. This is how EVs behave in reality. So I'd like to start with at the top with the charging behavior. So across the entire fleet, we're looking at around 2.3 gigawatt hours of energy charged, over 11,000 charging sessions, and we did this across 67 different locations. So this already shows that charging is not happening in one controlled environment. It's something that happens across real distributed networks. And what are the key learnings that we see here? First, charging is largely public-led. About two-thirds happen on public infrastructure, and depot charging is something that complements it. And this is mostly due to the fact that our customers are small and medium carriers, and their depots are not conveniently placed en route. So this means that en route charging is a major enabler, and we're already doing, and it's actually doing the heavy lifting already today. Then second, charging efficiency. We see around 88 to 92% efficiency, meaning that some energy loss is normal. And the important thing here is that we need to include this into our planning, and it's something that we also need to include into our cost calculations. Third, how operators actually use the network. So in reality, carriers are pragmatic. They already started to use car-focused charging hubs as well, like Ionity or MBW, for example, sometimes dropping the trailer while charging. So the system is already adapting even before truck dedicated infrastructure is fully scaled. And now I'd like to focus a little bit on payload and range because these two parts oftentimes are one of the biggest concerns. So firstly, payload. We see that around 25.5 tons are managed on 40-ton gross vehicle weight, which means that most of the real world freight already fits within EV constraints, and the payload is far less of a limitation than often assumed. And the second part, range, we typically see that 350 to 400 kilometers are possible per charge. And that already covers most regional transport legs. And for longer distances, we would simply add one mid-shift charging stop in the planning. And that leads to the third point, which is charging strategy. So more than 50% of the battery can be recovered during a 45-minute break. So instead of seeing this charging as a downtime, operators can align it with mandatory driving breaks. And this means that the charging doesn't have to slow you down. It's just something that you need to include into your schedule. And finally, on the right, you see the charging density map. And this already shows where charging actually happens across Europe. And the key message here is that we already see this operating across a broad and real network and not just isolated pilot corridors. And this continuing development in technology and infrastructure already highlights that the perceived limitations like payload, range, and charging are really manageable in real operations today. Now we had a look at the data. So let's have a closer look at the actual patterns in day-to-day operations and see what is important to integrate into your planning to make sure that projects succeed and not fail. So the first point is charging reliability. In theory, charging is simple, but we know that in reality, there's a lot of things that can go wrong. Chargers can be blocked, for example, or not working, or not accepting your card. So the key learning here is very simple. Always plan for 2 to 3 fallback options per route and make sure that the drivers have multiple payment options. This is not a nice to have. This is really basic operational hygiene. Then second, weather and buffer planning. So range is not static. We know that cold temperatures especially have an impact. So what we do is plan with a minimum of 20% state of charge buffer. And even under extreme weather conditions, so down to minus 20 degrees, every truck still reliably reached the next charger. So again, it is not about avoiding risk, it's about planning for it in your operational plans. And then the third, driver onboarding and coaching. So this is a massively underestimated part we need to keep into consideration. The driver behavior has a direct impact on efficiency. So things like driving style or preconditioning the truck while plugged in, and avoiding unnecessary energy consumption with proper onboarding and continuous feedback. We see 10 to 15% efficiency improvements, which translates into a bigger lever than many technical optimizations that you can think of. And fourth, the data integration across OEMs. We know that every truck manufacturer works very differently, so different APIs, different metrics, different definitions. And if you do not standardize this, you cannot manage performance at scale. So we built a normalized data layer that makes all trucks comparable, so across MAN, Scania, Volvo, Mercedes, and Renault. And on top of that, we include our customer feedback on a quarterly basis to the truck performance, and add them and track them against our benchmarks and include these learnings into our calculations. So we add the human layer into that model as well. Again, overall takeaway of this slide, we see that EV operations are not primarily a technology challenge, they're an operational discipline challenge. And now if we take one step back and look at everything that we covered today, the real question is not if you should electrify, but actually where to start. So let me summarize quickly. On the left side, we see the opportunity. So there's around 25% of emissions that sit in transport, and double-digit cost savings versus diesel are already achievable. And there's a few areas that can drive this, so both sustainability and cost advantage at the same time. Then in the middle, we summarized what really drives this success: utilization, route design, energy strategy. And if you get these 3 things right, then EV works. And on the right side, how to actually make this happen. So it's not about buying a truck, it's about removing risk through EV as a service models, identifying the right lanes through network analysis, scaling through flexible commercial setups, and plugging into the right charging ecosystem. So there's one very clear next action point that comes from this, and that is start with your network analysis today. So this is where JUNA can support. We help you identify the right lanes, find the low-hanging fruit, and then build from there. And with that, I would like you all, I would like to thank all of you for joining today's webinar and close the session. There's a couple of last housekeeping points that I'd like to mention. So as you've all noticed, we recorded the session and we will be following up with today's recording after the session. And we will also share a more detailed EV readiness checklist with you afterwards. And I really hope that you enjoyed today's session and hope that you have a great rest of your Wednesday. Thank you, everyone.